Hello there. Well, markets have largely recovered from the sharp falls we saw at the beginning of April after Donald Trump's Liberation Day announcements about trade tariffs. And in fact, the US stock market, which was the one that had fallen probably the furthest after all those announcements, is the one that's also been recovering the strongest. And a lot of people have dubbed this the so-called taco trade, and taco in this instance stands for Trump always chickens out. Because essentially markets have taken the view that if people don't like the tariffs or whatever it is Trump wants to do and the markets react in a negative way, that will put pressure on Trump to then take those back and renegotiate and try and do something a little bit different. So we have seen markets rebound quite a long way. As to what happens now though, that is very, very difficult to say. At the moment, those tariffs are on pause. Most of those tariffs, the pauses if you like, expire in July, the ones on China in August. So what's going to happen then? We don't actually know. We know that Trump is very unpredictable, so trying to predict what's going to happen to the markets is nigh on impossible. We think it's really important to differentiate between what's an opinion and what's evidence. So our opinion is that it's likely that once everything plays out that the tariffs will be a lot lower than the really high levels that were announced in April. But they will also probably, in our view, be quite a lot higher than they were before Trump came back into the presidency. But that's just our opinion, and it's very difficult to say. What we can do, though, is look at evidence about what effect those tariffs and the announcements we've seen so far are already having on the economy. So one of the things we track very closely are business surveys called Purchasing Managers Indices, or PMIs. And they kind of give you a bit of an idea about where the economy's going. One of the questions that businesses are asked as part of that survey is what's happening with prices. So in particular, one of the things we look at is for manufacturers, what are the input prices? So what that means is what are the prices of the underlying raw materials that they use to make their goods or whatever, that then may influence what the output price is or the price that they sell those goods for at some point in the future. And what we can see when we look at that in the US is that those input prices have gone up quite sharply, and in the past that's tend to mean that inflation has gone a bit higher, maybe 6 months down the line. So it looks like what's happening has already had an effect on inflation in the US. By the way, in the UK we think that things might be a little bit different. In fact, there could even be a bit of a deflationary effect from some of those, for example, Chinese electronic goods that might no longer be going to the US. Maybe they'll come over here, so maybe that will help take the edge off inflation here in the UK. Those business surveys also show other things, so that the businesses are asked what's happening with new orders. Are they getting more new orders that may then translate to profits down the line, or are they getting less? And at the moment we can see that sort of new orders generally, whether it's services or goods, have dropped off quite sharply. And those are kind of soft data, if you like, sort of survey data. They may rebound if tariffs are kind of announced that they're going to be lower. We've also seen some what we would call hard data in the shape of the US economic growth figures for the first quarter of this year. And in summary, essentially, the US economy shrank ever so slightly in the first quarter of this year, which was a bit of a surprise to a lot of people. And the reason it shrank is a little bit technical, but it's essentially because there was a much greater volume of imports compared to the number of exports, and that kind of essentially the way that GDP is calculated knocks a bit off growth. So what that seems to be indicating is that some of the companies were trying to get ahead of tariffs by importing things before the tariffs applied. But consumption, the amount of those goods that was kind of sold, had gone down. So that's why the economy shrank in the first quarter. A lot of people think it will probably rebound in the second quarter, because what will happen is having made those imports, those companies now don't need to do the imports in the second quarter, and hopefully consumption will rebound. So we'll watch that carefully, but all this is to say is there is some evidence that everything that's been going on is having an effect in the real economy, both through potential hit to the economic growth and to the potential increase in prices. So as I say, it's very difficult to see where this plays out for now, but if stock markets are going up whilst the economy is slowing, we don't think that can continue for very long. As one of those has to turn round, There is a relationship, of course. If the economy slows, company earnings will slow, and therefore their share prices ought to come down as well. On the other hand, if the economy rebounds, then that justifies maybe the stock market bounce that we've seen. So we think for now it pays to remain a little bit cautious, watch things carefully, and look for the evidence rather than trying to rely on people's opinions when we know just how unpredictable everything is. So I hope you found this useful, and we'll see you again next time.